Hello everybody and welcome to economics. So today I would like to start us off with an anecdote. It's a little story about my friend. Let's call him John. So John used to play a trading card game called Yu-Gi-Oh! And so he was apparently very invested in said trading card game and bought cards from people all over the country. And for some reason he wanted to buy cards from someone who required him to pay in Bitcoins. And so he obtained 47 Bitcoins in order to pay for his Yu-Gi-Oh cards. And this was back around 4 years ago, and 47 Bitcoins did not cost more than $1 a piece. Now here's the kicker for those of you who don't really know what I'm trying to get at. Around November 2013, one Bitcoin was priced at around $1,000 a piece. So if he had kept those Bitcoins until today, assuming he was prudent enough to sell them at exactly $1,000 a piece, he would have around $47,000. And you know what else is funny? He lost the Yu-Gi-Oh cards he bought with those 47 Bitcoins. And so why did I tell you that little story? Well, I just thought it would be a semi-relevant transition into what we will be talking about today. The Bitcoin craze. The whole Bitcoin phenomenon has been a pretty big deal over the past few months. Here's a graph of the prices of Bitcoins from last year to this year. So you can see the peak is around $1,000, but if you look back to earlier in the chart, evidently the price was only a fraction of its highest price. And because of this, people who have been criticizing Bitcoins have said that it is a speculative bubble. Some of you might be wondering now, what is a speculative bubble? Now we will be getting into more or less of an academic subject and something everyone should know, because these bubbles, although ostensibly innocuous sounding, can be very harmful when they burst, not only for the people who created them, but sometimes for everyone participating in the economy. So now a little history of bubbles. One of my favorites is called the tulip mania. Here's a brief summary of what happened. So in the early to mid 1600s, tulips had just been introduced to the Netherlands and there was a very high demand for them. People wanted to buy them so bad that they were willing to pay very high prices for them. But then one day a catalyst event popped the bubble. People realized the prices were inflated and wanted to sell tulips ASAP. This, however, caused prices to drop dramatically and eventually the prices collapsed. Therefore, it is evident that high demand caused by ignorance had caused the bubble. But why was there such a demand in the first place? Because people responded to an incentive. In many cases, the incentive that causes bubbles is the incentive of profit. In the 1920s, speculation in the stock market led to its collapse and the Great Depression. People speculated, and just to clarify, to speculate in this case means to try to profit in a very short amount of time off a commodity or asset by buying it at a low price and selling it at a high price, hoping to make money. But that speculation inevitably led to the inflation of the value. In the case of the Great Depression, the value of the stock. In the case of the tulip mania, the inflation of tulip prices. But eventually people realize the actual value of the commodity or asset, and the market naturally adjusts, usually through a collapse. Thus, from the evidence and reasoning above, it seems that generally we should avoid creating bubbles. So now back to Bitcoins. It obviously seems like a bubble, no doubt. How big? Let's take a look. Right now, it seems that the price is around $500. So that's not too bad. That's not really much of a bubble, or is it? Will it rise or fall in the future? These are some tough questions and extremely difficult to answer. Please comment below what you think is going to happen to Bitcoin. But keep in mind that this is only the first video to the Bitcoin series on economics, and part 2 will be coming out next week. And just a preview, it will be about the pros and cons of Bitcoins, how they can be used, why people would want them, and why they have such high demand and prices. So stay tuned, because the question of whether Bitcoins will increase or decrease in value can be answered easier after knowing about Bitcoins a bit more in depth. But until next time, this is economics.